All right, let's jump right in. We're looking at three fintech stories that, on the surface, seem totally unrelated. You've got America's biggest bank, the world's biggest payments company, and one of the UK's hottest startups. But when you put them all together, they actually tell us a fascinating story about the future of money. And this really is one of those days, isn't it? It feels like we're flipping channels between three different shows. There's a serious Wall Street drama, a high-stakes global thriller, and a kind of messy boardroom breakup. Our job here is to see how these different plot lines all tie together in the end. So here's how we're going to do it. We'll tackle each story one by one, starting with JPMorgan, then moving to Visa, and wrapping up with Monzo. Then at the end, we'll pull back and connect all the dots to see the big picture. Okay, let's set the stage. We're talking about three very different kinds of companies: the establishment giant, the global network, and the upstart challenger. And each one of them just made a move that's a really big signal for where the industry is heading. First up, JPMorgan Chase. Now, let's be clear, this is not some small side project. We're talking about the largest bank in the US, making a very deliberate, very serious move onto the blockchain. So what did they actually do? Well, they took one of the most traditional, maybe even a little boring products in finance, a money market fund. It's basically a super safe parking spot for corporate cash. And they put it on the blockchain. So instead of a paper certificate, your share is now a digital token. It's that simple. You gotta ask, though, why bother? Well, this isn't about crypto hype. The pitch here is all about one word: efficiency. It means transactions can settle almost instantly instead of taking days. The market is open 24/7. It cuts out a bunch of middlemen. It's all about making the fundamental plumbing of finance work better. And the upgrade here is absolutely huge. The best way to think about it is like the jump from cable TV to streaming. Cable works, sure, but it's on a schedule. It's a bit clunky. Streaming is on demand, direct, and just instant. That's the kind of massive leap in performance we're talking about here. So, here's the most important takeaway for this story. JPMorgan could not care less about the price of Bitcoin. That's not the game. They are making a massive strategic bet that the technology, the blockchain itself, is going to become the new basic plumbing for the entire financial system. Okay, so if JPMorgan is building the new pipes, that brings us to story number 2. Because you can bet that Visa wants to control whatever flows through those pipes. This is a classic power move from the king of payments. What Visa just did is get really serious about using stablecoins for settlement. So what that means in plain English is when you swipe your card, a whole lot of money moves between banks in the background. Visa is now using digital dollars, stablecoins, on a blockchain to make that whole process way faster and more efficient. And this is where it gets really interesting. You have to wonder, wait a second, isn't this the exact technology that could one day replace Visa? I mean, people could just send digital dollars to each other directly. So why on earth would Visa lean into the very tech that could threaten its whole business model? Well, it's a brilliant strategic play, and the Spotify analogy explains it perfectly. Spotify started as just a music company, but when podcasts took off, they didn't fight them. They embraced them and redefined themselves as an audio platform. That is exactly what Visa is doing. They're shifting from being a card payment company to a money movement company. And that's the bottom line for Visa. They honestly don't care what form money takes. Whether it's dollars, euros, or digital tokens on a blockchain, their only mission is to be the network that it all runs on. They're making sure they stay in the middle of everything, no matter what happens next. All right, so we've seen the old guard, JPMorgan and Visa, start to embrace the new tech. But what about the challengers, the companies that were born from these new ideas? For our third story, we head to London, where the super popular neobank Monzo is having some serious growing pains. And here's the headline: the CEO is out. But this wasn't about a scandal or bad numbers. It all came down to a huge fight with the board about one single question: when should we take this company public? So the battle lines were drawn. On one side, you had the CEO's team arguing, let's go public now. We have momentum, the market's good, let's do it. But the board was pushing back, saying, no, let's wait, let's grow more, expand internationally, and aim for a much bigger valuation down the road. In the end, the board won. This quote just nails the feeling perfectly. Monzo has this amazing fan base, this cool brand. They're like a band that's had a bunch of hit singles. They're about to start their huge stadium tour,
And then, right before, they kick out the lead singer because of a fight about the band's future. It's that kind of drama.
So the real lesson from the Monzo story is this. This is what it looks like when the cool startup vibe crashes headfirst into the cold, hard numbers of corporate finance. These debates about when to IPO aren't just theoretical exercises. They have very real consequences, and they decide who gets to stay in charge. Okay, we've looked at the banking giant, the payments network, and the startup challenger. 3 very different stories. So now let's pull it all together and figure out what it all means. If you take away just 3 things from our explainer today, let it be these. First, JPMorgan is proof that blockchain is graduating from a speculative toy to boring, essential infrastructure. Second, Visa shows that no matter what money becomes, the biggest players will adapt to control how it moves. And third, Monzo is a reminder that for all the disruptors out there, having a great product isn't enough. The journey to the public markets is brutal, and strategy is everything. And that really leaves us with one final big question to think about. We're watching the old guard of finance take the technology of the revolutionaries and make it their own. So as this tech goes from being a revolution to just an evolution, who's the ultimate winner? Is it the disruptors who came up with the idea? Or the giants who have the scale to perfect it and roll it out to the whole world? That's the big question.